Hi, I'm Harland Merriam, and this is Mike Jacobson here again. We're back. We're with Attune Investments, an investment firm that specializes in multifamily or apartment investments and makes that investment available to people like you. Today, our conversation is about multifamily as the perfect investment. And I said it right, perfect. At least it's a lot more perfect than many other investments. Some investments that I've had, and probably you've had too, Mike, have not been that perfect. Do you have an example of that?
Yes, there was one year when my wife and I were coming back from vacation in Gulf Shores, Alabama. We were there for a week, and she has a considerable amount of her 401k in the company stock. And that company stock had dropped from $60 a share down to $35 a share in 1 week. All it took was an article in a paper, something negative about the stock, and it dropped. And that was a real buzzkill to the end of a vacation. That was a long ride home, and she was not happy.
Yeah, you almost had a good time at Gulf Shores, and then all of a sudden just dropped out from you. And investments can do that. They can be really very volatile. We've seen that in the stock market. We've seen that in other places. Kind of like riding a roller coaster on some investments, isn't it?
That is, yeah, because sometimes it can be like hopping on the roller coaster blindfolded. I'm not sure if I'm getting on the Seven Dwarfs Mine Train or if I'm getting on the Great American Scream Machine.
And those are two very different roller coasters, aren't they?
That's right, about 60 miles an hour worth.
Yeah. So we've looked at all of this. We've had experience with a whole variety of investments over our lifetime, and we have come to the position that real estate is a very good investment, and multifamily almost a perfect investment. Let's talk about real estate here as an asset class, Mike. Why is it a good asset to have some of your portfolio in?
Well, it gives some diversification, but it's been used to build wealth for many generations. The wealthy have used it to grow their wealth, but a lot of people have used it to gain their wealth in the first place. It's been proven over centuries.
Yep. And Mark Twain, didn't he once say, buy land, they're not making it anymore. It's different than a lot of other things we invest in, the latest and the greatest fashion that's out there that rolls up and then rolls back down again, like 8-track tapes or floppy disks, or you had one in your fishing world there, didn't you?
Yeah, the pocket fisherman.
The pocket fisherman, yeah. But real estate's a hard asset. What do you mean by that, Mike?
Well, it's something you can put your hands on. Whereas if you buy stock in a company, you're buying shares of that company. And with the real estate, you have an actual building, with the tenants, paying rent.
Yeah, it's a hard asset, not an idea, not a concept, not a fad. And it's an asset that has continuous demand for it too. How does it hold up during times of inflation? Because we're all expecting inflation to hit here sometime.
And that's where it holds up very well in inflation. So we can see, over the past few years, even with low inflation, there's been a high demand for places to live. People still need a place to live. And we've seen house prices go 100,000 to 120,000, 150,000. We've seen rents go up. What used to be $900 a month then becomes $1,000 a month or $1,200 a month. They just keep going up.
Yeah, inflation is out there, and the value of the property again has some stability. And in fact, it's really a hedge against inflation, isn't it, to have these hard assets, real property?
Yes, it is, because we are buying that asset with today's dollars and then paying for it with tomorrow's dollars, which are worth less.
Got it. And we've talked in the past about real estate itself being an IDEAL, ideal investment. What do those letters spell out, Mike?
Start with the income. So the property produces an income stream. You have depreciation, which is a tax benefit to reduce the taxable income, even though you have the cash coming in. You have the equity buildup. As the residents pay rent, you use that to pay down the mortgage, and that's building up equity as well. Or that's part of your amortization, loan amortization, but you have the equity buildup as the property increases in value. And then finally, the alpha leverage. You can purchase a property maybe with 20 to 30% down. So as it increases with the value increases with inflation, you are able to multiply that return because you haven't spent $100,000 for 100,000 of real estate. You may be 25,000 for that 100,000. So if it increases 3%, you have now received a 12% return just due to inflation.
Yeah, so that has all of those that you just really can't get in the stock market, can't get with gold, not even cryptocurrencies per se. You know, they're all five of these, and we've talked about them on some other of our conversations here. But within real estate as a whole, we look at multifamily and have found, looking back over the last 20, 30, 40, 50 years and longer, that multifamily has been a very stable investment class. What happened during the Great Recession with multifamily, Mike?
Well, we saw a lot of people still need a place to live. You know, there were some houses that were foreclosed. Some people moved into rental houses. Other people moved into apartments. We saw people moving from more expensive apartments to less expensive apartments. So the demand in the B and C apartments, where we like to be, stayed very strong. And that's important to us. So even though the residential market for houses may be up and down, we see that having the steady income, because the rents don't change that much. If they dip a little bit, you still have enough to more than cover the mortgage. And so you're able to cover your expenses.
Yeah, and during that Great Recession, what is that, 8, 9 years ago now, whatever it is, maybe a little bit less than that, but it's during the Great Recession, it's more than that. Multifamily was just a very stable place. There weren't as many delinquencies with multifamily. They operated well, significantly well, like 9 times better than residential during that. Demand is just consistent for a place to live. And even in the edges of the generations, boomers now are moving more to rental properties and to apartments. They like that simple lifestyle. And millennials, also a growing demand in millennials in a growing generation there for multifamily, for apartments. Scalability is another aspect, Mike. Talk about that some.
Sure. Take, for example, single family house. Let's say after all expenses, you have a cash flow at $200 a door. Well, how many houses do you have to have an income stream of, say, $10,000 a month? That takes about 50 houses. Whereas think about an apartment complex. If we say we want $100 a door from the cash flow, then you can achieve that in one apartment complex. And not only that, you can centralize the property management and the maintenance staff all on site. So now your maintenance staff, you don't have to call and have a service guy come out and charge you $75 to fix something. I mean, that's just to walk in the door for a short call. So you can realize economies of scale with the multifamily. And then it's also large enough for both active and passive investors to participate. It's harder for other people to participate with a single family house, but with the apartments, you can get more people involved.
Yeah, so those of you that are watching right now may have thought, well, I can't participate in real estate and multifamily. I can't buy an apartment complex, but you can. Partnerships make that possible for smaller, savvy investors like you to get into this perfect investment, multifamily investments. You don't have to be a millionaire to get started. We can show you how to do that. And it's just it's the access is there, isn't it, Mike, for regular people to participate in multifamily apartments?
That's right. Yeah, so we can compare that to real estate investment trust, which are available, but the returns don't tend to be as high as what we see on some other real estate partnerships. And with the smaller partnerships, we can see where we can control the appreciation. We can have an idea ahead of time what we are going to do to increase the value of that property and control that. And then finally, individual investors can they can get to know the people who will be managing the property ahead of time, who's managing the investment.
Yeah, so get to know somebody, get somebody that you like and that you trust, and get with them and learn about multifamily as this more perfect investment than others. As Will Rogers says, don't wait to buy real estate. Buy real estate and wait. So get some and watch and see all of these benefits that real estate has for you. Thank you for joining us today. We're Attune Investments. It's Mike Jacobson, Harlan Merriam, Mike Bocanegra, one of our partners. And we every week provide information about why multifamily real estate is a great investment, and that you can learn about that. You'll see a screen come up as soon as we get off today that will give you the website to go to to get our ebook that we've published and get on our mailing list so you can get this information coming to you regularly. Thanks for joining us today, because we've been talking about something that can be for you a perfect investment. Bye-bye now.